Happy weekend, everyone. This is Mornings with Michael, weekend edition. Hope everybody's having a great weekend. You can reach us at 415-828-7997. If you have any personal financial questions, remember that Mornings with Michael is for informational, educational, and entertainment purposes only. We dedicate this to all of you out there and who are making a difference in our world. Well, I put together a PowerPoint to share with all of us today, just kind of see what's happening. Let me share the screen here. First, we'll take a look at our VIX. Here's the VIX. Looks like it is a shooting star. So it's that's possible that we may have a day or two more of retreat on the VIX. And put together a little PowerPoint here. Let me locate that for everyone. So this is a look at our seasonality index of the S&P 500. We're right about here towards the end of February. Shows that from this point on till the middle of March that the market retreats. Looking back, it looks like the last 2 or 3 bear markets ended in March. So that's what everybody was hoping for. With the recent PCE, personal consumption expenditures, people are doubting that thesis. The other point in the market, which has pulled back a lot, is in September. September and October have been really terrible months for the market over its time span. So we'll just have to see where this bear market ends and how our inflation, how we can get this inflation under control. This is a look at Microsoft. It's amazing. Microsoft is valued more than the 23 S&P 500 stocks in the energy sector, the XLE ETF index. So the thinking is that if the market continues to retreat, that Microsoft will have its share of pain. Microsoft, Amazon, Apple, Google, Facebook. These are the stocks were highly owned, so this is where a lot of the selling is projected to take place. With the PCE report coming out, we want to take a look at what inflation has hit the hardest. Airfare, household energy, food products for pets, food at home, rent, housing. These are some of the things that have really been up the most. Federal Reserve looks to the personal consumption expenditures price index as measure of inflation. It's its favorite indicator. January's PCE index rose 0.6% versus expectations of 0.4%. Everybody was thinking that inflation was under control and that we were going to have a no landing, no recession. So this totally changed the picture. The year-over-year PCE inflation rose to 5.4% versus 4.9%. This is a chart that kind of looks at the PCE inflation. As you can see, expenditures is still quite a ways above incomes. Incomes have dropped considerably. Maybe this has something to do with layoffs as well, but that isn't good for the inflation gauge. Housing has retreated quite a bit. U.S. housing market lost $2.3 trillion in value from its peak. That equates to a 4.9% decline. marking the largest June to December drop in percentage terms since 2008. Existing home sales unexpectedly declined in January, a record 37% year-over-year collapse. That's just amazing. Where people who have a lot of money, they have a different opinion on how this all looks. They said, we are entering the best real estate market opportunity since 2008. Why this billionaire investor is aggressively buying income-producing properties. This is looking at the 7-year Treasury auction high yield. It has reached its highest level on record. This will only help to further invert the yield inversion. In geopolitical news, Biden administration plans to quadruple U.S. troop presence in Taiwan against a rising China threat. The U.S. plans to deploy between 100 and 200 troops to the island in the coming months. And how does China react? China's jet fighter shadows the U.S. aircraft over South China Sea. Moving on to Russia. Russia perceives events in the Ukraine as a war with West for survival of their culture. So this is not the type of news that we really were hoping for. Take a look at the NASDAQ. It had been the leading index. It's pulled back quite a bit here. On Friday, we got a doji. So it looks possibly like maybe a change. I think possibly the market could bounce back and maybe fill this area in here. Volume increased. The index closed on the upper channel of its upper 75% of its candles, so that's good. We got a little uptick in the MACD, a little divergence here on the MACD, and we got a declining handle here on the commodity channel index. This is the S&P 500. Similar action. Actually, similar action in the small caps and the Dow Jones. Popped up. Everything popped up at the end of the day. So we'll just take a look there. The thing that did the area that the action was the best on Friday in the market standpoint was financials. We'll just take a look at financials quickly here. They held up relatively well, and see how the financials started off in low territory and they trended up higher the rest of the day. The thinking is that if the financials sell off as well and people start buying bonds, this will further invert the yield curve. And without the financials to hold up the S&P 500, we'll take a look at the S&P. S&P held up relatively well. It had a gap down in the morning, but it held up relatively well, and most of that was due to the hard work of the financials. So if the financials turn back with the rest of the market in a downturn, usually 8 out of 10 stocks go down. This will not be beneficial, and these trending lines will prove to be resistance, and the guess of a 20% further pullback in the markets will come true. So we'll just have to wait and see. It's all continues to be data dependent. Let's hope we can get this inflation under control. And in the meantime, if you have a question about your personal finance, feel free to call 415-828-7997, or you can text us as well, and we'll be here for you. And in the meantime, continue to enjoy your weekend, your family, and continue to work on your goals in the coming weeks. Your goals and activities will help us get out of this lull and get us back to a productive environment. Everybody have a great weekend. This has been Mornings with Michael. This has been for educational, informational, and entertainment purposes only.